If you're looking to purchase a home in the new year, doing extended research is a must in today's housing market. Thankfully, the man behind the mortgage deals at West Shore Mortgage is giving us a crash course lesson today. Joining us live is Matthew Cole. Hey, Matthew, welcome back.
Hey, how are you this morning?
We're doing good. So, Matthew, where do you see rates going into 2022 when it comes to the housing market?
I mean, we got super spoiled with rates over the past year and a half to 2 years being in the mid twos, low twos, upper twos. They've definitely crept their way into the threes at this point. High twos are still available with a little bit of cost, but my projections from what I'm seeing, rates are going to be, moving up to the upper to mid threes here pretty quick in the first and second quarter of 2022. And they're projected to be up in the upper threes, which is still great. Those rates are still the best we've seen over many, many years. So, I missed the twos, but I'll cherish the threes.
And are loan limits increasing, Matthew? And if so, what does that mean exactly?
Absolutely. So every year, Fannie and Freddie, FHA, they come up with extended loan limits moving into the new year. So this year was the biggest loan limit increase that I've ever seen in 20 years. So what they did was the minimum loan amount in Sacramento County for a conventional loan was $547,200. That number is, $548,200. That number just moved to $647,000. And Sacramento County also has what's called a high balance conventional loan that actually pushes you up to $675. The benefits to these are that it keeps you out of the jumbo financing area, which is extremely hard to qualify for. You got to be kind of like the top of the top to be able to make that happen. We do have options to get you out of the jumbo loan types with different loan variances, but this helps big time, especially in the area because Sacramento housing prices are increasing, and we needed that big boost to help people stay into conventional financing. So basically, what that means is you could do a $700,000 purchase with 5% down.
Oh, wow. Good to know. And why should people let you take a look at their current mortgage quote from their lender?
I mean, I'm a local small business mortgage company here in Sacramento. Born and raised in Yuba City. Lived in Sacramento with my family the last, 18 or so years. Keeping business local is what I'm all about. And at the end of the day, if I'm going to be able to provide you better service, a faster close, better communication than any of these online places, and give you the same deal, you're going to win at that point. Especially if you're buying a house. These guys offer some really good shiny rates, but if you're just going to go there because you think it's going to be a more simpler process, I would beg to differ just because I think our process is better than anything online. My team is really, really good, and we're going to offer really good rates as well. So I just challenge people to give me that opportunity to at least let me look. And if not, so be it. I'll tell you, you got a good rate, but I'm still hoping those places can close you in less than 60 days because that's the rumor, and that's what I see now. We're still under 30 days to 21 days.
I agree, and I think there's a comfort in knowing that you're working with somebody local when doing something as big as an investment in buying a house. And Matthew, what benefits do you provide to buyers?
Any buyer that comes to us, I'm paying for their appraisal right out of the gate, which is about a $500 to $600 benefit for them. We do that right on day one for every buyer, just to keep the process moving along at a quicker pace. A lot of companies won't buy it or get the appraisal going for a week or so, and especially with the contingencies and the stricter sellers market that we're in, still it's just a benefit to get that appraisal going. So we pay for our buyers' appraisals day one.
Oh, that's nice. And what separates you from online lenders, Matt?
I mean, I'm here. I never want to do the job wrong because I would be afraid that you're going to come into my front door and punch me. So anybody who's online, they don't really have that scarcity of like making a mistake. They make a mistake, they don't care because they know you're not coming by to yell at them. So for me, it's just more of a purpose to me to do the job right, and also to be able to communicate and just get you the best loan here locally in the Sacramento and Yuba Sutter area. We do a lot of purchase loans here in Sacramento in that area. So you would be quite pleasantly surprised, I feel, if you give us that opportunity to earn your business.
And if someone has mortgage insurance, how can they get that removed?
On a conventional loan, typically you just want to have that percentage rate, that equity rate of about 20 to 22%, and then you could call your servicer to get it done. But if you're an FHA loan, right now is that time to do what it takes to try to get out of it, because you're gonna they're going to see the rates go moving up. So getting out of the FHA mortgage insurance, I would just give me a call to see how we can help you get out of an FHA loan and into that conventional loan, which is the best financing you can get.
Matt, we appreciate that crash course from you as always, and happy holidays to you. And for more from the man behind the mortgage deals, visit ilendsac.com.